So guys, now we are in the section where we will talk about stop loss and take profit. This is our first wave. This is our GBP USD pair, and this was my entry point, and here is my first stop loss. Why I installed it here? Because if it was my first wave, this was my second wave, and now I am in the third wave. In any probability, if it is already a sustainable trend, the price should not be back here. If it was back, so it means that something was wrong in my calculations or in price movement, in chart movement. So when it is already in the third wave, I will install my take stop loss right here. So when I have already the third wave or finish it at the fourth wave and it goes again up to the fifth wave, I install my stop loss right here and then wait for 5 waves inside of the 5 waves inside of the fifth wave. If it has 1, 2, 3, 4, 5, it means that time to close it. If you of course may count, I can count, and I'm quite sure you will also learn it. It's not so difficult. Just wait for the 5 waves inside of the fifth wave. When you have already 5 waves, you may close it, or you may in the first time it may be difficult. Then what you will do? You will wait until the first one, second, third, fourth, fifth. So when the fifth is a little bit higher than the third wave, you may close it. But of course it's not ideal closing point, but before you will learn it, it's also not so bad. So what we will have now, it's around, I guess it was 660, 150 points pipes, and it's quite a good result. So the next one is, also look at it, the first stop loss is here. And then when it goes up, according again that the price should not be back here if it is the third wave. So when the third wave breaks the top of the first wave, I will install my stop loss right here in the top of the first wave, a little bit about 150 pipes, 100 pipes lower than the top of the first wave. When it has already 3 waves, as you see it is flat, and the flat has already 3 waves, and then it goes again up, then I will install my take profit stop loss right here, and I surely have already about 230 pipes take profit. Then I will wait for the 5 waves inside of the fifth wave. When I had already that, so I will close the trade. In that case, I will have around 550 pipes, and actually I did get that. So let's go to next one. It's Euro USD. It was the wrong trade, as you remember, but anyway, what we will do in that case, if we will do first, I have to enter right here, not here, and my take profit, sorry, my stop loss should be right here, and in that case it will be around 200 pipes. So let's check it. This is the top. It's around the 250 pipes. Then I will wait until the first, second, third, fourth, fifth. When I had already fifth wave, inside of the fifth wave I have 5 waves, and then I will close my trade. So next one is Australian dollar New Zealand, and as you remember, this trade also was profitable. So don't be afraid from the large candlesticks. It was actually the night, and spread was very, very high. So what we have here, this was my entry point. So when I have the first wave, then at this first wave of the third wave, 1, 2, 3, 4, 5. When I had already first wave, then I have the second wave, then I had already third wave, then I install my stop loss right here. The first stop loss was here, then I will put my stop loss here, install my stop loss here. Why? Because in my case, if it is already third wave, the third wave should not have, this was our first, this was our second, and third wave should not be back here. It should have the first fifth wave, and then as it was in that case, should be again go up. So 1, 2, 3, then I install my first stop loss right here. Then I wait for the 5 waves inside of the fifth wave. When I had already 5 waves inside of the fifth wave, I closed my trade. And as you see, after I closed my trade, it was during about 2 hours. It goes again back and comes to right the point where I was my stop loss, the first stop around here. It was my first stop loss. And as you see, during 1-2 hours, I could lose all my profit. So be very careful in that case, and always track your trades. In that case, you will be out from that. You will close your trade timely. Usually you will not see the 5 waves, for example, like here in the 15 minutes frame, and therefore you have to go, for example, in 1 minute frame, where you will see all 5 waves clearly without losses. But I would like in this sample also to tell a little bit more about the tracking the trade, because this is the good sample for it. As you remember, we entered somewhere here, and our consideration was wrong, because with higher probability this is not zigzag, this is the flat. Okay. But actually I did take it into account that it could be the flat, and therefore what I did, I knew that if it is the flat, and as I said before, the price should go up again for the B, and then we will have the C, the next one. So therefore I did wait for the time, for the right appropriate time. And as you, when I had first wave, second wave, then I did remove it, reinstall my stop loss, because the first one was somewhere here, and then I did take it for the right place here. Why here? As you see, the first we have about 150, let's say approximate 150 stop loss, and this is my entry point. So with if I will get stop out, I will get it without any and actually I did get it without any losses. But why here? Because if it is the first wave, and this is our third wave, or actually this is the first wave of the third wave, let's assume it should, the price, if it will have, but actually during the third wave there are correction is very moderate, but in any way, if it is by means, by all times it should come here to 61.8%. So then it will move further up, and if it will, for example, after the first wave, it will go up, and what I will do, I will reinstall it to here. Why here? Because after the first wave, when we have the third of the third, after the second, when we have the third of the third, and then will come the fourth wave, because each, like any other waves, the third wave also has 5 waves. But as I said, the corrections here is very, very moderate. So if after if there will come the fourth wave should never come, should never be back to the top of the first wave. This is one of the most important, one of the 3 main rules of Elliott wave. So here is our by stop loss. Here our trade is hedged. Anyway, if it will break the stop out, we will get about 200 pips profit, and this is the very, very hedged, because according to our calculation, the price should not be back. And after the fourth, if it will not be back here, after the fourth we will have the fifth of the third wave, and it may bring us a plenty profit. But as you see, our calculations was wrong, and it was the flat, and then we have the next flat, and then price goes down. But anyway, we didn't lose anything. Okay, so let's go for the next trade.